This steel supercentre can store 12,000 tonnes of the commodity, more than twice the amount used to build the Auckland Harbour Bridge. Why this site has been built in a construction downturn.
We call it the sugar rush, I suppose. Commodity prices went up through the roof, volumes went up through the roof, demand was very high. We knew what comes up, it's got to come down.
On the dollar figure on how much steel you've imported to Stockpile here though, what's that around?
Well, it's a long-term play. Asmus has been around for 100 years. We've weathered many cycles. This we see as just another cycle, and you just got to hold your nerve, and it'll pay dividends.
This is the infrastructure behind industrial infrastructure. A brand new 15,000 square metre logistics facility in Drury, south of Auckland, has been made to store thousands of tonnes of steel beams and pipes. This site was designed and built specifically for Asmus, a privately owned steel importer that was started by Henry Asmus in 1920 and carried on by his son William. The business has been behind some of the country's most significant builds, including the Marsden Point former oil refinery, the Waikato River hydro dams, the Huntly Power Station, and Wellington's Waterfront Stadium. Its latest expansion is proof that it's still growing and gearing up for more major projects as the economy improves and efforts get underway to fix our infrastructure deficit.
So we started building this in June 2023. So June
and you
last
moved
year.
in a few months ago?
Yeah, the build was 13 months. It was built from start.
That is crazy quick.
It was crazy. It was very good.
Asmus brings in steel from mills around the world, from Australia to South Korea, China, Thailand and Taiwan, making it one of the more globally connected New Zealand operators. So how do you think about the geopolitics of the world right now, given that you import from all of these countries like China, Taiwan?
Look, it's interesting times. I think for us, we've just got to be mindful, make sure that we've got alternatives, and we have. So that's the main thing.
Dean Brown has been leading the Asmus Group for the past 6 years. He did the deal to lease out this site. In this interview, we discuss why he's confident the commodity will stay in demand after its price has fallen over the past 2 years. Dean, thank you so much for having us here. Good to be here.
Welcome. Thank you. Come to Drury.
You
Really
are most
pleased to have
welcome.
you
It's
here.
awesome. This is
Lovely.
very cool. I love hard commodity stuff like this, so I'm very pleased to be here. I guess the first question is why? Why build a warehouse of this scale, and especially why now?
Why now? Why now is getting ready for when the market picks up. But we have had this in the pipeline probably for the last 4 or 5 years. To find an existing DC to stock steel is very challenging. So we knew we had to do a design and build. Started on that journey before COVID. We parked it when COVID hit, and probably about 6-12 months later, we were up to our guns with stock, and we thought, right, we've got to get this project back on the table. And we had steel sitting in 3 sites around Auckland. 1 site we owned, the other 2 sites we leased, so it made sense to get everything under the one roof.
You said when the market picks up.
Yes.
So it was up, like you mentioned, demand skyrocketed.
It did.
It's now fallen quite
Yes.
dramatically with the state of our economy. Talk to me about the demand dynamics right now and why you're still bullish enough on construction in this country, which gives you the confidence to build this now.
Well, the market is cyclical, and we've had a great run. You know, I don't think any of us could have imagined how well the industry went, 21 to 22. We call it the sugar rush, I suppose. Commodity prices went up through the roof, volumes went up through the roof, demand was very high. We knew what comes up, it's got to come down. So it was even keeping my board at ease and saying, look, we'll enjoy it while we can, but we know it's going to come down off the high side. And but we saw no other time better now, because we needed to do this bit of work. And it's probably been a blessing in some ways that we're doing it in the quiet time, because we can still maintain a very good service level, but we are confident that the market will pick up again. There's just so much infrastructure investment that's required across New Zealand. And as for Asmus, we want to be ready. So the timing's actually worked out quite well. As far as trading at the moment, it's tough though. It'd be fair to say, look, the last 6 months we're on the bottom. We're waiting for it to to pick up. I think it's going to be probably challenging times probably for the next 6 to 12 months, to be honest.
So you're an importer
Yes, we are.
of commodities. So is all of the steel around us, all of these beams, are these pre-purchased, or you've just imported these and expect to sell them at the same price that you purchased them, or at a higher price in future for future projects?
Good
How does
question.
that work?
So look, so all this is for stock. So these are for orders that we have not received yet, so it is a big investment. We do indents as well, so those indents will come from our supplier straight to the customer, but all this, what you're seeing in this warehouse, is stock for projects.
How much is in here at the moment?
Well, at the moment we've come in, and look, it's always hard to design a DC, because if you build it too small, you don't have enough capacity before the paint's even dried. And if you go too big, especially in Auckland where property prices are high, so you've got to find the right balance. So we did quite a lot of modelling. We've come in here, we're around 55% capacity at the moment. So we've got room to grow, and then we've also got a plan B of what we'd do next in 5 to 6 years if we are at capacity. So this DC has been designed to supply the Golden Triangle, for want of a better word. Even though we have branches in Hamilton and branches in Tauranga, a lot of the big structural steel will be fed from here straight down to those sites as well.
Goldilocks, you want that size to be just right.
That's right.
Can you give me a dollar figure on the investment, or even something ballpark, because I know that you're a private operator and you probably don't want the exact dollar amount out there.
Yeah. Look, the investments are big. Look, the land out here, this is a 2-hectare site. So you're talking over sort of 15 to 17 million for the land, and then the build itself is around about 25 million for the build. So these are big investments that you need to make.
On the dollar figure on how much steel you've imported to Stockpile here, though, what's that around?
Well, it's a long-term play, and you're taking that on a long-term position, right? And it's, we're backing ourselves. Asmus has been around for 100 years. We've weathered many cycles. This we see as just another cycle, and you just got to hold your nerve, and it'll pay dividends.
What about New Zealand's current infrastructure environment, the money going to it, the confidence being thrown at it? What about that gives you confidence that you can make a bet this big?
Well, for us making a bet too big, it's we consolidated 3 sites. So we had to do it for our own business. We needed to do it to improve operational efficiency. And improve safety as well. It's a far safer site. Everything's under hook, everything's under cover. So we need to do that regardless, or otherwise you decide, are we going to be in the market? So you either get in boots the wall, or you decide to make the decision to get out. And we see it's an important part of the market. There's a lot of investment. Yes, it's slowed down with cost of finance, inflation, a lot of big projects are coming to an end, but there's a lot of other work that's in play. And once that picks up, we'll be ready.
Bottom line, we have an infrastructure deficit.
Absolutely.
And you're getting ready to help fill it.
Correct. And this has been a huge enabler for us, because our property in Mount Wellington, where probably 60% of the steel in this building was on that site, Jeram's been an enabler for us to develop that site now. So we have started an $8 million reinvestment on that site, building all the offices, total new fit out, get people back to work, get people back in the office. And then the back part of that building, which is about a 10,000 square metre warehouse as well, we're in the process of redeveloping stage 2 of that now, putting a whole new racking system in, pallet racking, and that's for our valve and fitting business. Again, all targeted, getting ourselves ready for the infrastructure investment when it does happen.
Tell me about the kind of projects that your products go into. You said Asmus has been around for over 100 years. It was started in 1920, which
Correct.
is a very long time ago.
Yep.
Incredible that it's been around for that long. What kind of projects has Asmus been involved in, and what kind of projects going forward are you expecting to sell your products into?
Yeah, look, Asmus has been involved in some of the biggest infrastructure projects in New Zealand, back through to a lot of the Think Big projects, Huntly Power Station, a lot of the hydro stations, geothermal, Marsden Point Refinery in 1965. We supplied a lot of valves into that.
That's amazing.
So very strong pulp and paper with the likes of OG in that market. We supply those industries today. The Central Interceptor has probably been one of our most recent, where we supplied a number of valves into that project, but also polyethylene pipe as well. So we extrude polyethylene pipe for water pressure systems. We make that in Hamilton. So we're supplying those sort of projects as well.
Think Big was a great initiative for businesses like this.
Yeah.
Do you think we need something like that again? Or if I can ask that another way, is your business hoping that we see something like that again in this country?
Look, I think we are hoping for it. I think New Zealand needs investment, and we can't do it alone. And I think it's how does the government attract good offshore strategic partners who can help us get there, because I don't think we're going to get there alone. But it needs to happen. You can't not do the maintenance. You cannot repair the pipes. This work has to be done. So we're just being patient. I think ourselves, our competitors, a lot of our customers in that civil infrastructure market, we're all being patient at the moment. It was great to hear the government talk about the fast track projects and release of 140 odd projects, which they're going to try and get those moving. But at this stage, it's talk. What we're all looking for is the action, right? And then things will start moving again.
Let's talk about steel demand globally. It's been falling for the past 3 years, according to the World Steel Association.
Yes, it has.
If we do have an uptick here, that would be a tiny blip to help production globally. What are you seeing with the businesses that you deal with, who you import from around the world? Are they struggling? Are they glad that you're at least buying their products?
Well, look, I think they're glad we're buying. I think, look, there is more demand. There's more supply than there is demand out there. China sort of sets the pace as far as what's happening with prices out there in the marketplace. Their exports out of China have increased dramatically over the last few years. And then China's trying to they've introduced the stimulus to get infrastructure going again there, but that is going to take some time. So I think we think we're at the bottom. Like, we're not quite back where we were pre-COVID, but that said, energy costs for making steel has increased, labour costs has increased, shipping costs have increased.
Yet the steel price is down.
And the
markedly.
steel prices have come down. Yes, it is. And you've just got to navigate that. And you've just got to pick your battles of what projects you go after. And sometimes you've just got to take a pause and be patient as well.
So you're quite wise then, given that there is excess capacity in steel and you're buying and you can stockpile it. This stuff isn't food. It doesn't expire. It may rust, but you can clean it and it's still usable, right? Pretty wise.
That's correct. But you need to have the range and you need to be ready. And we're still moving. Our volumes are down probably around about 5 to 6% down on last year. So we're managing our position okay. Look, we're expecting the market to soften and we've just got to ride through it now. I'd like to be the optimistic and say everything is going to come right early next year, but honestly, I think it's going to take a bit longer than that.
But what I said to you is that this is the infrastructure behind the infrastructure. This is the construction supply chain. How critical is all of this, the product, the commodity behind the scenes, to actually making construction happen in this country?
Well, it's very important because they need, there's some customers who will indent for large projects, but you still need the local stock. Your lead time for this product is 12 to 14 to 15 weeks.
Wow.
So a lot of our watering, we're fitting in with the mill runs overseas. So there are the long lead times as well. So you need to accommodate that.
So effectively you want constructors to come to you
Correct.
and you've got the product ready to go, so
Correct.
you're front of line.
That's correct, absolutely. And steel's a commodity, but it's more than just steel. It's about, it's table stakes is we're all bringing in quality product from reputable mills that meet a standard. I think some of the differentiators are your people. It's certainly your service delivery model is really important. The relationships your people have is very important, and making sure your people got the product knowledge, right? So you can still differentiate in a commodity, but it's still very tough, and we've all come off very high stock levels, so the market, I think a number of us our stock levels increased 80% from where they were pre-COVID. We've all rebalanced back a lot better now.
How much down are you from that now?
We're down. We got very high at the peak. Had the tiger by the tail, if you wanted to call it. I was looking for other sites around Auckland to to stock steel, because what was happening is a lot of the shipments were being consolidated. So while we thought we had 1,000 tonnes coming into the port, there could be 2,000 tonnes coming into the port, and you had to clear it very quickly. So that was very challenging.
We have domestic steel manufacturers in this country.
Yes, we do.
Why should the big projects use imported steel instead?
Well, the domestic steel, as far as New Zealand Steel, and they're a great partner of ours. The plate you saw out under the canopies, majority of that is from New Zealand Steel.
I saw a Fletcher Steel sign on some of it.
Yeah, it could be too. So they're a strategic partner for us, but they manufacture plate, very big in their wire products and also in roofing irons and coil product. But they don't no one in New Zealand is manufacturing structural steel or hollows. So we need to import that product.
Would you ever consider getting into manufacturing it?
No, the scale, just the economics don't stack up. They don't stack up. You need to, New Zealand, while we punch above our weight, in the global scheme of things, if you look at the total supply of steel into New Zealand, it's still quite small.
Economics of this investment, when are you expecting to break even on it?
Oh, we're very comfortable with this building. Yeah, look, we've come into this on this is a design build lease. We've gone a 20-year term, so we're a long-term strategic partner. We could have built this ourselves, but we've got other investment projects that we're working on, and we'd rather use that capital on those areas. So we're more than comfortable. We built this at the right time. We got in there just before the interest rates started to increase, so we're very comfortable, and we've got certainty on this site for the next 20 years.
So look around then, what would your message be to anyone wanting to kickstart a project, a big infrastructure project? You guys are good to go.
Look, I think you've got to look ahead. You've got to back yourself. I think you've got to really look at where your strategic position is and where you want to be the next 5 and 10 years. For Asmus, regardless of the ebbs and flows of the market, we needed to do it ourselves because we are already seeing productivity gains. It's enabling us to do what we need to do in Mount Wellington, and we've got the balance sheet to do it. So we're going through quite an exciting time because Asmus has flown under the radar for many, many years. So our board and our shareholders are very excited because this is one of several investment projects which we're underway with, which is great.
I wasn't going to ask you this, but you certainly do fly under the radar as a business. It's a real privilege to be here.
Lovely.
Why come on camera and show us around your warehouse?
Look, I think it's time that we do beat the drum a little bit. I think, look, we work with some of New Zealand's biggest fabricators who are great customers, some of the biggest civil infrastructure organisations in New Zealand, and I think they want to see Asmus out there beating the drum a little bit as well. We've been around for a long time. I think there's not many companies which are what I call New Zealand Inc. that have been around for as long as we have. We're fifth generation getting involved in Asmus now as far as at a board level.
Fifth generation family.
Family business.
That's incredible.
Absolutely, yeah. And they are still as committed to the business and the future of the business, so it's pretty exciting.
And the future of the country by the looks of it.
Absolutely, and for me it's a privilege to be part of it. They got a lot of support, a lot of autonomy, and yeah, we're looking forward to what the next 5 to 10 years will bring for us.
Well, thank you for having us. Really appreciate it, Dean.
Thank you very much. Thank you for coming in.
Thanks for watching Markets with Madison. If you enjoyed this interview, please hit the like and subscribe buttons below. I do all of the research for these episodes myself, so your support means a lot. I always love to hear your feedback and ideas, so please drop any thoughts in the comments below. Now go put your money to work.